Good morning, everybody. Welcome to another iteration of Value Investors Edge Live. We're hosting Oystein Kalleklev, the CEO of Flex LNG, as well as Avance Gas. Oystein, good morning. Thank you for joining us.
Thank you, Jay. And you're getting better at my pronunciation of my name every time.
I'm working on it. That's the true challenge. So I appreciate you spending some time with us this morning. So first of all, let's do an overview of the LNG markets. What's going on at this stage in the game? I mean, the spot rates have been shooting up over the last month or two, but it seems like most of the business is sort of long term, and that's certainly the case for you guys.
Yeah, I think, the spot market is not as liquid as it used to be. Today's spot market is mostly a relet market where people who have a gap or people who are short on ship, and it could be short of ship because they're doing a dry docking or if they have a breakdown. So there are a lot fewer transactions. Cargo values has been at such a high levels that nobody really wants to be short shipping when you get into the high season, because if you're short on shipping, you will have to sell your cargoes to some of the traders and lose out on a lot of economics. So that means that the liquidity of the spot market is much lower than it used to be, and because all the owners, including ourselves, have mostly put our ships out on term contracts from 1 to 10 years or so, and the traders are basically using the spot market as a relet market. But rates are up to above 200,000 for modern tonnage, but again, not that many fixtures.
Yeah, no, it certainly makes sense. I watched the weekly Clarksons index, and it certainly went up a lot over the last few weeks, but it's hard to see any actual fixtures on the market. I know, you don't have any vessels open, and everything you have is fixed for the next few years. One thing I have to talk about is this massive LNG order book. How does that balance into the market? Does that concern you at this point, or do you think the market can absorb this stuff?
I think it depends on timing. I've said this before as well. Next year looks a bit challenging because there's a lot of ships for delivery next year. But if you look at the expected volume growth in terms of exports, it's very muted. From 25, we will start seeing more export growth, but 25 order book is also huge. From 26, you get more volume growth, slightly fewer deliveries. So it starts to getting better balance. And then from 27, you get a really big drop in a number of new buildings. And while volume will be shooting up with all these new projects, both in America and Qatar. And then from 28, the order book is fairly slim. Also driven by the fact that, we got to these kind of rather expensive ships. So that means, we have been a bit cautious about this window where you have very low volume growth. And that's especially a fact when ships are going a lot to Europe, which is driving down tonnage miles. So I would be more concerned on the front end of the curve. Once you're getting to 27, 28, I'm less concerned because your volume growth will be up a lot then, order book will be tailing off, and then also a lot of the steam ships will be scrapped because they're inefficient, they're too small, and also because of the environmental rules and the carbon tax being implemented in Europe next year. So I would be more worried, but our first fully open ships are from 27 and beyond, where I think the market looks more balanced.
What about the short-term risk? I mean, these spot rates are unprecedented. Is there a pretty high risk of a big pullback here in Q4?
Yeah, I think, of course, I don't believe that we will see this rates on for extended period of time. Of course, last year was the best year since 2015. 2023 is going to be better than 22. I don't think rates can stay at 140,000 at forever. So certainly we do expect rates to come down to normal sound levels. And if you look at the forward curve, you can basically buy the paper for freight. We are looking at rates next year more like $60,000. And we've made 36 million in profits in Q1, 36 million in Q2. We paid 50 cents for both quarter. And actually, we also have more ships for delivery than with these new buildings, which have kind of superior earnings capacity compared to the older ships we are selling. So we do think rates will come down and normalize, but we think rates will stay healthy for the rest of the year. Q4 will be a fantastic quarter for Avance Gas, and then we do think market will start to normalize at one point.
Is it fair to expect, I know it's not official guidance, right? But is it fair to expect a larger dividend if the rates hold up?
I'm CEO, and I'm also board member of Avance, so I can only recommend to the board, and I only have 1 out of 4 votes, so it's not fair for me to say it. But if you look at what we have done in the past, it's basically paid out all earnings. We have a sufficient cash balance, so we don't need to kind of hold back a lot of earnings.
Yeah, well, certainly unsolicited advice. Do not deviate from that strategy, which has worked so well at both Flux LNG and Avance Gas. I hope you do not deviate from that, and I look forward to hopefully a much larger dividend here in upcoming in Q3. Thank you so much for joining this morning. Your insights in the LNG and LPG market are definitely appreciated.
Okay, thank you, Jay, and thank you everybody for listening in. And I hope to be back next time when you can pronounce my name even better.
I'm working on it. Have a good one, Oystein.